Put his makeup on, but that should be good.
Well,
Is that good?
Do you have makeup on?
No. That's the next step, right?
I was gonna call you on the way
You were
over
like,
here.
really?
Like, so do you have a makeup artist? What's going on?
We're doing the hair.
Yeah.
All right.
Oh my goodness.
What, has it started already?
yeah.
Oh, okay.
Oh, that's awesome.
Well, hello everyone. I'm Fernando Sandoval with the Saltwood of Interest team, Remax All-Star Real Estate, and we are going to start our live event that we have every Thursday at 5:30, and we're going to be talking about all things mortgages, and we're going to be taking your questions live in a minute. But while the countdown is going, and before we start, I want to start with a little bit of gratitude, and I want to tell everyone thank you for watching, thank you for being a part of our team and part of our community, and thank you to the 3 families that signed listing agreements with us this week.
Yes, absolutely.
Totaling
That's
just
awesome.
shy of $1 million in listings. Thank you so much for your trust and your support, and thank you so much for everything.
That's great. It's a week of 3s because we actually have 3 brand new home buyers that closed on their homes this week as well here in Tampa Bay. So
Okay, awesome.
helping out people all the time, right?
Right. That's why we got into this business, to help people, get to their next home and get to where they need to be. So
That's right.
With 15 seconds left to go, I'm going to introduce Brandon Harrell here, and he is the mortgage expert, and he is our guest speaker today. And we will be having all kinds of discussions that will be of great interest to you. So, without further ado, and now that the countdown has finished, I'm going to put my relaxing.
That thing's great. I love that.
All right, so there we go. So we're going to be covering all that. So let's just jump right in.
Sounds good.
So Brandon, I want to find a home first before I talk to a mortgage professional. What say you?
That has happened sometimes before, and it's probably not your best bet. First, because you get your hopes up potentially, and you think you'd be qualified for some price point right up here when really you're qualified down here.
Okay.
Which obviously there's some good homes down here, of course, but if you start looking at homes that are kind of out of your price range, then you get your hopes up and you fall in love with something, and then there's just no point for it, right? So it's really, really important to speak with a loan professional first, find out how much you qualify for, and then go on your home search, right?
Absolutely. You'd hate to be disappointed, and you'd hate to miss out on that house.
Exactly.
Absolutely. So let me ask you a question. I get this a lot. So what is the difference between condo financing and single-family home financing? What are some of the differences there?
Good question. So the great news is, first of all, these days it's fantastic. Previously, you would typically need more of a down payment when you're going to purchase a condo, but these days you can get a condo with a minimum down payment of 3%, potentially. Yep, with a conventional loan. Yep.
Okay, great.
But with condos, the big difference is you have to get the condo association approved. Basically, that condo building has to be approved by the lender, right? They have to make sure that the condo is in good standing, they have enough reserves and funds, all that good stuff. Obviously, with a home, you don't really need to go through all that. So very, very important to know that that your lender is working in tandem with that condo association.
Absolutely. Great. That's great information.
Yeah.
And in case you're wondering if we happen to have a list of FHA approved condos, we do have that on our website.
Yes.
So if you want to go to stpcommunity.com and click on the blog button and just scroll down, you'll see it was about 4 or 5 blocks ago. It'll say FHA, or other approved condos.
Very handy.
Or reach out to Brandon and ask him, say, hey, I'm thinking about buying in this area. What condos are approved, right?
Absolutely. Something to also to consider when you're looking at condo financing is sometimes it depends on your debt to income ratio. Usually if you're looking at a condo, they have condo fees, almost like a homeowners association fee, right? A condo association fee. And those need to be included in your debt to income ratio. So make sure when you're talking with your lender, you're saying, hey, I'm looking at this building or this place. Make sure that lender knows how much those monthly association fees are.
Absolutely. And one of the things that we're going to do next week for next week's episode, actually, it turns out that Julie and I are going to break down the differences between buying a condo or buying a single family home.
That's great. Yep.
That's what we're going to do, because a lot of people come to me and they say, I don't want a condo because of the HOA fee. but I think there are some things that we can explore there that maybe you may think twice about a condo. I don't know.
There's a lot of benefits to purchasing a condo, and I mean, you know, they're popping up all over the place. You know, downtown St. Pete, obviously downtown Tampa. There's going to be all kinds of new buildings and you know, places, options to live. You know, a lot of potential there. So yeah, condo can be a great option for a home buyer.
Awesome, great. So tell me a little bit about the credit impact on a loan application. So if I make a loan application, some people think, oh, that's just going to hurt my credit. You know, that's going to hurt me, hurt my rating. How does that work? Tell me
yeah, I think that's kind of a misconception. When a lender pulls your credit report to you know, when you're looking or taking a mortgage application, they pull the the official tri-merge credit report. So Equifax, TransUnion, and Experian, right? So all three credit reporting bureaus, they'll pull, and then basically the lender will look at the mid credit score, and that's your qualifying credit score. Now, when they do that, you know, I think it's a misconception that, you know, borrowers ask me all the time, well, is it a hard credit pull? Is it a soft credit pull? Blah, blah, blah. The lender needs to know everything, right? So it might hurt your score maybe like 2-3 points, but typically that's not going to be the difference in whether you qualify or not, right?
Yeah, 2-3 points sounds like a very small amount.
Absolutely.
I mean, if you have a 700 credit or a 650 or that kind of thing.
Exactly.
Which actually begs the question, tell me a little more about the credit score and how that affects the loan. So if my credit's 580 or maybe it's 650 or maybe 700, how does that change?
Good question. Great question. So lenders obviously use the credit score when qualifying borrowers. Typically, you know, credit scores can go down as low, for qualifying purposes, credit scores can go as low as 580 when you're talking FHA loans, like, you know, government-backed loans, minimum 3.5% down. But when it comes to conventional, typically you're looking at a minimum credit score of 620. 620, okay. Yeah, so not bad. But lenders use those credit scores, just like any other creditor will, to help them gauge on how strong that borrower is and their credit and their history and all that stuff. So, you know, the stronger the borrower is, as far as their credit history and assets, income, all that other stuff, typically the better, you know, interest rate they're going to get, you know, so which means you're going to get a better deal on the home. So,
that's awesome.
Yeah, exactly.
So is a mortgage application free? Is every mortgage application free? Tell me a little bit more about that.
Good question. So not necessarily. There are some lenders out there that actually charge upfront fees for those applications. A few come to mind that I'd care not to mention right now.
we're not gonna dog on
exactly.
Anybody. Absolutely not. We're not here to do that.
Right, but there's a few lenders out there that will charge you know, a consumer deposit to pull the credit application and everything else, anywhere between, you know, from $400 to $750.
Wow.
So they want that that borrower or client invested already with that lender, so they don't go, I don't know, maybe they don't go shopping around or everything, but no, definitely ask those questions up front when you're talking to a mortgage lender and thinking about submitting an application. Hey, are there any fees involved in just getting pre-approved, blah, blah, blah. You definitely want to do your homework there.
Okay, wow, that's great. That's great information. Another question I hear a lot from my buyers is the amount of income that I have to make in order to qualify for some of these down payment assistance programs. Some of the folks that are calling us are saying, well, I know it sounds like I need to make less than $30,000 a year to qualify for some of these. Right. Is that true, or what is that?
Good question.
Dispel the myth, if you would.
I love the demystifying mortgage that you call this, by the way. That's fantastic.
Okay, well, thank you.
We'll try and sift through all the smoke and mirrors, right?
Okay.
So a lot of down payment assistance programs actually in this area in Tampa Bay, you know, whether it's a state, county, or city program, a lot of those qualifying incomes actually go all the way up, like for a 2-person household, go all the way up to 63,900. So 63,900 can be the maximum income for a 2-person household for some of these programs. So you can be a 1-person household, right? You can be single and sick of renting, and hey, it's time for me to buy my own place, right? You can get in there with some of these programs where it's a maximum of 63,900 as your annual
that's
income.
Really great.
So you can get some of those programs have up to 7,500 in down payment assistance. Some of them go up to 4%. Of the purchase price. So there's a lot of options out there. Definitely explore those options. There's a reason those programs are out there. They want people to use them.
So definitely check with your mortgage lender, your real estate agent. We know how to get that information for you, and we're glad to help. That's what we're here for, right?
That's right.
Another thing that I hear a lot of my buyers wanting to know about is changing jobs, changing professions, and that kind of thing. So because we have a lot of people that come here to St. Petersburg and they want to relocate from other areas, and let's say they're an engineer or what have you in the city that they live in, but they want to come here and maybe do the same job, or maybe they're thinking about changing jobs. Maybe they want to get into real estate. So tell me a little bit about job changes and the effects on mortgages.
Absolutely. Well, first of all, try not to change a job while you're in the middle of purchasing a home, right?
Absolutely. I think that
goes without saying. You'd be surprised.
You got to say it.
Exactly. But typically what a mortgage lender will look for is 2 years of employment history, right? And housing history as well. So whether it's a rental, where you've been renting, all that stuff. But when it goes back to employment, they're looking for consistent employment, right? Obviously, gaps of employment. If you went on a hiatus or something, that's kind of got to be addressed, that kind of thing. But typically lenders would like to see, again, being a strong borrower, would like to see 2 years of employment history within doing the same type of job, right? In the same type of industry. It doesn't have to be exactly the same. For instance, you can be an office administrator for, I don't know, like an accounting firm or something like that, and then get a job as an office administrator, maybe for a law firm or something like that. That's okay. That's
the same kind of job.
Right. Exactly. So it's best, if you're weighing the options of maybe getting a new job and also thinking about purchasing a home, it's best to speak with a mortgage professional and inquire first before you make any crazy decisions.
Absolutely. Right? And I actually had a situation where a gentleman was in construction, and I don't know how this happened, but midway through the mortgage and home purchasing process, he actually got a promotion.
Wow.
And we had some hurdles there because the promotion also meant a change of job scope. Like he wasn't doing the same thing he was doing. So what comments do you have regarding that? Should I tell my boss I don't want the promotion because I want to stay in the same industry, or should I take the promotion, take the more money? I mean, what's the conflict there?
Exactly. So logically speaking, think of it this way. If you were a mortgage lender and you were about to lend, $200,000, $300,000, $400,000, you would like to see an improvement in employment, right? That strengthens that borrower's profile, right? They come across as a stronger borrower. So basically, as far as just kind of proving that stuff, the mortgage lender will speak with your employer and get some type of letter of explanation or verification stating that, hey, this guy just received a promotion. We're all excited about it, and typically the mortgage lender will use that new income as qualifying income.
Okay, awesome, great. That's good news. Absolutely. What about us poor folks that work on commission? I have to ask. Sorry.
No.
So some of us work on commission. 1 month we'll make 0, the other month we'll make X. I won't say, but what about
that? There's ups and downs, right? Ebbs and flows, of course.
We're eating ramen 1 month, and the next month we're going to the steakhouse every night.
Right, exactly.
It's just the nature of the business.
So typically, mortgage lenders will, average your income out over the course of, a year or two, and kind of use that as your qualifying income. So for those instances, I should say, it's very, very important to show the consistency of being employed and doing the same occupation for a decent period of time. Yeah.
Okay.
Does that make sense?
Very good. Yeah. Mm-hmm.
Okay, great.
Okay, so now I want to go into a little bit about you and the difference between you and other options that folks have out there in the marketplace. So what is the difference between you and, say, a Rocket Mortgage, oops, I said that, or, you know, an online place, or maybe a national chain, or, you know, there's a lot of options out there. So what is the difference between you and them? Tell us a little bit
about it. I think, I don't know how many mortgage lenders out there have a man bun and live in Clearwater, Florida. That's one difference, I think, right?
I will say that one of the things I like about Brandon is that he's almost as good looking as I am, but not quite.
I love it. That's so funny.
So, you know, he's got the band one, that's
right.
So anyway.
Well, I think one advantage is, you know, obviously being local. You know, obviously saying, you know, when you're looking at making a purchase as big as, you know, purchasing a home, then obviously you want some local people that you know, you trust. You know, you're the real estate professional that you're dealing with, like yourself, obviously. You want to know that who you're working with is a true professional, and they know the ins and outs of your situation and are able to provide any options available to you. Not everybody does that. Right. So I think what's extremely important about this process is making sure the consumer has the power, right? And I think you would agree with me. There's I've seen in this business I've been in it for a few years now, you know, and I've seen a few lenders out there that just kind of go through the motions and, you know, kind of rapid fire them. You know, they don't really take the extra time, you know, to provide that type of attentiveness to their clients, and I think that's pretty important. So, you know, that's one of the differences, I think, in I don't know.
Great. No, it's great because I mean, when I go looking for someone to work with, whether I'm buying a car or buying a home or anything really, I like working with local people, and I like supporting local businesses. And I also like the ability to walk up to an office or somewhere, knock on the door, and see that person face to face. I don't understand the mentality sometimes of, you know, some people want to deal with these 1-800 number things or these big national chains where you're going to be on hold. And it's like the whole time is 30 minutes. Like, why would you want to deal with that? Like, I want to be able to call Brandon, or I want to be able to call my local attorney or whoever it is I'm doing something with, and be able to get a hold of him and be able to speak with a human. I mean, wouldn't that be nice? I mean, I think there's some value to that. That's just me. Maybe I'm just old fashioned.
No, I think that's smart. I think that's smart.
So one of the other things I hear a lot from my buyers is they see ads on TV, or they see something about how, hey, we'll pay your closing costs or whatever. I'm very confused by that, and I'm a little scared. Tell us more about some guy wants to pay my closing costs, and he's driving around a Ferrari. I don't get it. Or whatever. Please don't sue us, okay? So tell us a little bit about that.
Yeah, well, you know, I used to be in the marketing field, right, in the mortgage business as well. So I got some experience with the advertising and the marketing and the way, you know, that these lenders operate. And I think there's a bit of a lack of transparency there. Okay. You know, I really do. And I mean, come on, guys, nobody does business for free, right? So it's coming from somewhere, right? I'm not going to just advertise to everybody that, hey, I'll pay all your closing costs. They're not cheap, right? Right. So they're you know, they're finding a way to. It just goes back, you know. Go with somebody who you trust, you know, that explains everything to you. Again, putting the power back into the consumer. And if you're interested in going with someone who says, hey, I'll pay all your closing costs, blah, 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 right? Good. Ask them, okay, well, why are you doing that? Where is this going? What are your other fees? Blah, 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 that kind of stuff.
How are you getting paid?
Very important. Right?
Yeah, I think transparency is very important.
Exactly.
So, absolutely. Read the fine print, you know. And if you need some help reading the fine print, by all means, give me a call. Or on a call. I mean, we're glad to help, even if you're not working with us. We're glad to help out. You know, that's what we're here for.
Yes.
Also, another thing we want to touch on, and I think there's some confusion here, is loan pre-approval versus pre-qualification. So I think the people use the terms interchangeably, and it doesn't mean the same thing, though.
No, that's
we know what it means.
Right.
You know what it means.
Exactly.
But can we explain a little bit to our folks here that are watching?
Well, let's back up for a minute and
Okay.
and take this perspective.
Okay.
So first of all, previously we were talking about how important it is to get pre-approved or pre-qualified before you go home hunting, right?
Right.
Obviously that's important to set the right expectations and know exactly what you can afford, so what you should be looking at. Now on the same token, if you're a seller's agent, right? Okay,
and which I mostly do. Yeah.
Right, exactly. And are representing, the seller, and you get multiple offers. Now, those offers typically will include a pre-approval or a pre-qualification letter, right?
Absolutely.
So, what do you look for in those letters?
Well, you might laugh at me, but I actually call the lender if the lender phone number is on there, and I will say, what is. Tell me about your buyer. Tell me about your qualifications.
Sure.
And they will tell you, which is great. Right. I think it's a listing agent's job to advocate for the seller and be able to say, hey, are we talking real here, or are we talking maybe? Has this guy given you the information that he needs to give you in order to afford this home, right?
Yeah, exactly. I think that's smart. Obviously you're representing your seller. You're making sure that the offer is solid, right?
Right.
Then that they just didn't, print up a letter, on a whim, that kind of thing. So going back to your question, the difference between a pre-qualification and a pre-approval letter is typically a pre-qualification letter is provided by a mortgage lender to a prospective borrower that where they have kind of chatted with them, they got their information, not really documentation yet. They haven't really reviewed any of their documentation. The initial documentation that I'm talking about is typically bank statements, pay stubs, just verifying the income and assets that borrower provided on their mortgage application, right? Yeah. Which they should be doing that. So once they do that, that documentation is provided, then the mortgage lender, the loan originator, will verify all the documentation, verify the numbers, and then assign a pre-approval letter. So all that initial documentation, tax returns, the pay stubs, the other stuff that I mentioned before, that's all been verified, and typically that will give that borrower, that home shopper, a leg up against the competition when they're submitting an offer on the home, right?
Right, absolutely. Okay, great.
Yeah.
So what about interest rates? I mean, what
about? I don't know.
How is that going? I mean, I hear in the news that the Fed's raising interest rates. Is that something that we should be concerned with, or is it okay, or what?
Good question. So as it relates to the mortgage industry, something to keep in mind is every time the Fed raises interest rates doesn't necessarily mean the mortgage interest rate is going up that much and it's all consistent. That's not how it works. Typically mortgage interest rates, they have been rising, right? Yeah. You're around the high 4s, mid 5s these days, obviously depending on how strong the borrower is, it's all specific to each individual situation, what type of interest rate ballpark they will be in, right? But as far as the market trends and everything else, and what really drives interest rates from what drives them to rise is actually inflation. So as inflation rises, typically the mortgage bond market and mortgage interest rates will rise with it. Obviously, because they know that now consumers can afford it. They can afford a bit more of a higher interest rate or a higher monthly payment and everything else. But man, I really haven't seen, it's not going crazy, number one, and I really haven't seen much of a damper on the market, with these minimal rising interest rates. They are rising, it's a fact of life, but remember, the interest rates that we're coming from, I mean, we were at seriously low interest rates that we're rising from. So still great options available out there. Yeah. And I don't know, it's just, I think the media puts a bit of a spooky twist.
I think so. I think I have to agree with you, because I was just going to say, I might be a year or two older than you. It's more like 10, but 20, no, I don't know. But at any rate, I know, like when my parents bought their home, I mean, their interest rates were high. Like we were talking 12%,
Right.
16%. 9% was a good rate back then, you know, in those years. And so when people tell me, "Oh, interest rates are crazy, they're 4.25%," they're like, "What are you talking about?
Right.
They're not 18%."
What do we say to the naysayers, Fernando?
What about it?
We say nay.
We say
nay to the naysayers, right?
Okay.
So no, housing is very, very affordable.
Very affordable,
You know, they're just trying. You know, it's the media puts different spins on it, and you know, home purchases are really, really good for the economy. So you know, obviously the government and the economy, they want to keep housing affordable.
Yeah,
right.
Absolutely.
So it's good for the country.
Absolutely, great. All right, well, I don't know if we have any more questions. Thank you, Patrick Anderson, for watching. Thank you, Lorraine and Julie. We appreciate that. If there are any other questions, we'd love to take those at this time. If not, I'm going to talk a little bit about our next segment again.
Awesome.
We're going to talk next week about condos versus single-family homes and what that means and what that looks like.
Great topic.
And I lived in a single-family home. We had a 3,000 square foot house with, 3-car garage.
Well,
and,
yeah.
Man, I hated cutting that grass. So, I mean, you might say I hate the HOA, but I mean, we're going to break that down. So that's going to be great. So please join us next week.
Topic.
And
yeah,
then,
awesome.
If you have any other questions later on, reach out to Brandon here. I mean, you want to tell us how to reach?
Sure, Brandon Harrell, NMLS 123-8187. My cell phone number, you guys can call me directly if you have any questions anytime. It's 863-513-5830. I'm with Fairway Independent Mortgage. I'm about to open up a brand new office right downtown Clearwater, so pretty excited about that. And yeah, just give me a shout with any questions. You can find me online as well.
And for us, we're Julie and Fernando Sandoval with the Saltwater Ventures team. Our website is stpetecommunity.com, STPETE community.com. Our blogs are on there. You can search for homes. We have currently 17,000 homes for sale just in this area. That's amazing.
Crazy.
That's condo, single family, all kinds of stuff. So reach out to us. We're here to help. We don't charge you up front anything. We don't charge for consultations. We don't charge for answering the phone. I mean, it's just reach out to us. We're the professionals and we love to help, and that's why we do this. So thank you so much. Thank you for joining us. And we hope you'll see us again soon.
Yeah, I mean, thanks for doing this too. This is tremendous. How you guys are educating consumers. Just getting the knowledge out there. Not everybody does that, so we appreciate you.
Great. Well, thank you.
All right.
Appreciate it.
Thanks a lot.
Thank you.